Thursday, February 6th, market analysis. Stan Early, good morning. About 10:04 California time. We have a very stable, strangely quiet day today. It was a little reminiscent. I can tell you that we start out with the stock market indexes always, and they typically the E-mini, and then go to futures markets, and sometimes other things like seasonals or cycles and a variety of other stuff. Now, we're not doing much today. It's going sideways, and you'll see that reflected in the very short term 1 minute, maybe I'm using 5 minute charts coming up in a moment. And you can also see that the range today, high to low, is very small, relatively speaking. As a matter of fact, so far, it's one of the smallest, just looking back over time in the last, weeks. This implies that the market is waiting for something. I'm not sure what. I'm not a funny mentalist, so I don't pay too much attention to that. It is what it is. Now, let's look at, and we are generally speaking up against a significant resistance zone or area where since middle of November, December, January, now February, we have topped out. And that's been one, two, basically three or four occasions. This is either 4 or 5 that we're back to the same area again. So there's an increasing possibility, probability, in my opinion, that we're going to turn back down, in which case we still have the double top potential, in which case some of these indexes have head and shoulder top formations, not just doubles, in which case this is the beginning, maybe, of the next significant down leg, which should, and I probably said this once or twice in the last couple of weeks, because it looked like it was starting just that way on January 24th. And I was rewarded the next day with a huge down day on that Monday, next Monday. But all week long, it crawled back until again this Monday, we had a minor new low in the E-mini, but no follow through. And here we are back to the same levels we have closed at for a couple of weeks ago. So if we manage to push higher all of a sudden and break into new highs for a couple of months or more, this is probably going to explode extremely bullishly for a few days. But I don't expect that. I think this is the high of a move up, or we have had it on January 24th, because that couldn't make a new high Monday to Friday last week. And so far this week, it's not a new high, and we're smack dab at where it might stop. Okay, enough of that. Those comments are relative to most of the other indexes as well. Here we are rallying. We're right up against the same levels, so it's kind of tough for me to say that I think we're going to turn down. There's not too much evidence of that, but I do see what I'm used to seeing. Overbought conditions, short-term basis, resistance area, chart formations, variety of stuff. Now, SPY is going to be basically the same thing, but the E-mini is a market that is a copy of the SPY, but the trading hours are hugely different, 23 hours a day, as opposed to this symbol, which is only 6:30 in the morning to 1 o'clock California time, PM. So a lot shorter hours. Now, the overall longer-term formations will appear in both charts, but the nuances that appear in the spider, which has a much longer history than the E-mini, are not to be ignored. Last time we were up in new historic highs, and we were, January 24, it didn't stay there. We challenged the same rally highs just a short time ago, last Friday, couldn't stay there. Boom, Monday. Now we're crawling back again. I think we're losing upside momentum in the same ballpark area where it has lost momentum and topped out. And this is going to be a double top. Maybe you could call it a triple if you wanted, but basically a double top if we flip-flop down. Now, if today we have an outside down day, which does not seem likely because we're up near the highs, we're relatively strong. I don't see any at this moment. Looking at the 1 minute chart on the spider, evidence of it beginning some kind of a major move down. It looks like it's the right place to do it, but it's not yet doing it. Next, QQQ. Again, shoulder. Bearish engulfing ER sell signal, November 11th. Top of the market, overbought, November 16th. New highs, great, okay. Came down, created a low, moved back up, but did not make a new high for the trend, and was approximately the same amount of time from the first shoulder to the head, then from the same thing, head to the last shoulder. You can forecast approximately when the last shoulder will occur. This one did, approximately on time so far. But here we are rallying. This is a new high for a week and a fraction. Will it stop and turn down, especially today or extremely quickly, today, tomorrow, and start making lows lower than the last few days? And especially breaking below 509.5. And if that happens, I think we're almost assuredly, just my opinion, going to break below 502, the neckline, and the downside objective would be for, call it 60. That's the pattern I think is developing. And we're right smack, I think, extremely close to the turn down. But I'm wrong occasionally. Obviously more than that. But if it doesn't turn down, then these patterns, head and shoulder tops that fail to work that way, and they usually do, kind of explode to the upside. And what we end up calling it was a big sideways trading range that for a while looked like a head and shoulder, but it didn't work. It ended up, past tense, being a big sideways on the way up in a bull market. But the point is, we're about to see a big move up or a big move down real soon. Next, QQQ. Now we had a little dip, made a minor new low for the session, coming back halfway. Nah, I haven't got it. Nope. I'm going to go faster. Head and shoulder top in the NASDAQ futures, NQ. Still in force, looking very much like the other. So I got to see it turn down ASAP. 1 minute chart, still up there, still strong, but no new highs momentarily. And we did get a sell signal on the YM on the high of the shoulder, which reinforces my concepts here, ideas. But I can't call out a shoulder because there's nothing over here that's quite right. Not too bad, but I just don't want to stretch my opinion. I can see the neckline would be from here to here, it's slightly downward slanted, blah, blah, blah. I'd rather call this a head and double top formation. If you measure the objectives in either formation, you usually come up with something extremely similar anyway. Next, YM has started to work its way lower and now down 143. And that's what I want to see happen in the other indexes. So is this leading the way down? I don't know. The Russell stopped today, right smack dab at that resistance area again. This is number 5 in about 2.5 weeks. We are now about unchanged. So we went from a relatively firm, a little higher opening to testing resistance and came all the way back to where we opened and then made a little bit of a new low. And the 1 minute chart shows you that just recently, the new lows. So this looks like it could be on the way down. Even the rally we just had is right back up to a very minor today only layer of resistance. Pretty accurately too. Wow. So bonds. I can't say enough about this trade. Bullish engulfing ER buy signal on the bottom day, exactly. November 14th said so on the day it happened. With my signals, I don't know if they're going to be super important like this one has been so far already, or they're going to last only a day or two, or if they're going to fail. It's just that most of them historically have worked out pretty darn good, and I am optimistic about the market continuing to work higher. But I'm overbought now, and I'm looking for, frankly, a minor high and a minor downside correction. And my stop at the moment hasn't moved up more than just a tiny bit today so far. I like everything except overbought, minor correction expected. Hope I don't get stopped out, then make new highs. It'd be great. So far, we are in at the exact low of the day on January 15th, and that was 110. Let me see here, 110.30. The bullish buy signal was on one that's January 14th on the very bottom of the move. Now, I like what I see, except for what? Remember, the minimum upside objective on the head and shoulder bottom is up here at about 117 and a half. We are probably 2/3 to 3/4 of the way up already. Today's high is about the same, maybe a tick or two above yesterday's high. This is working great. Notes broke out to the upside yesterday in a classic bullish breakout. All the price range yesterday was equal to or higher than previous highs and equal to or higher than the neckline. So today we're backing up just a little bit. We almost got oversold yesterday, overbought yesterday, so I wouldn't mind a minor little dip to the downside. Next, we're looking at crude oil. I like the fact that we finally got oversold. At this point, maybe we could work a little lower, but not much. I do expect a rally. Let's see how it handles the top of the old pennant formation, which we came back down into. It could stop there, but I'm thinking this could be the beginning of something longer term, a bit more bullish. Let's see how this thing turns around. Now I am able to get some green bullish engulfings if we do start to have any kind of a key reversal soon. Next, heating oil. Support holding. Not really making much headway to the downside. And generally speaking, in a very broad, longer term support area. I didn't draw that in, but look at that low back here. Some evidence in here, that high, recent lows. I don't know. It's okay. I've seen better. So now the head and shoulder top and the natural gas. We have a little bit of a problem starting yesterday and today. The head and shoulder top worked out fine. We came down, created a neckline before the last shoulder, a little bit lopsided, not too bad. I don't like the neckline being quite that upward slanted, but it's within acceptability. Breakout day was a little on the feeble side. The next day was it. All the price action was under the neckline, new lows for a while. We got some follow through. Okay. Rally back up to the neckline, classic. That was Monday. Started to come down to close a gap, closed at least half of it, probably a little bit more. And now we're challenging the previous rally high on Monday. I would expect that not to have happened. I would have expected it to come down, finish closing the gap, and maybe even start to trend lower consistently. The minimum downside objective on the pattern, if it's still good, is 204. I'm sorry, 2.4. And now I can expect a new high, but it has to continue to stay under the neckline. You usually don't see a double test under the neckline. You usually see that one on Monday and then kaboom, down. That would be textbook. These are happening sometimes, but they're pretty rare. It needs to turn down ASAP as soon as possible, ASAP. Gold, overbought, coming down a little bit today. Been overbought for 2 or 3 days, not that big a deal. I'm expecting a move down to probably in the ballpark of 2782-ish at a minimum. Maybe all the way back down to the previous top of the pennant formation, and that could be 2695. Modestly bearish for a short period of time, and then we'll see how it handles the upside, which has not been fulfilled yet. The pennant formation we had was pretty good looking. Classic breakouts. Upside objectives are in the realm of 2990-ish up to as high as 3116. And they haven't been reached yet. So this is what? A minor downside correction on the way up. Next, silver. Kind of the same commentary. Resistance area, super close to being overbought, just barely, and a little bit of a dip starting today. Probably not much more. I expect to see new highs, week or two. I need to be a little worried about whether it's going to get overbought again and testing the high of this resistance area. But if we can start to close over 33.55, that could just run up a lot more very quickly. Platinum. Okay, well, we got a major bearish engulfing on Monday. We came back up on Tuesday some, but on Wednesday, yesterday, we came up enough to get an ER3 new short sale for a day trade scalp, which I think lost a little bit of money. It wasn't very much. If it may have made a little also. Our overnight position for ER3, we sold short yesterday, is a very, very small loss at the moment, several ticks. But we do have a higher high, and it started to slip off a little earlier. I know it was green a few hours ago. I think it's going to turn down. I have no reason to disbelieve my signal bearish on Monday. So resistance stopped the rally yesterday and this morning. Let's see what happens. Excuse me. This, if it does work very well, will be the third time that this indicator strategy has picked a high. Last time, October 30th, major high. Time before that, May 20th last year, major rally high. Are we going to get another big one now? I'm not sure. I'd much prefer to see this thing turn down quickly and substantially. Next, copper. Overbought in a resistance area, excuse me, today. So at any moment, and it could have been today's high, I would expect to see it to go sideways at a minimum and start to come back down some. Now I think it could even come back to 4.08 support again. Why not? We're not that high. Last time it was there, it only took about 2 or 3 weeks to get up to here where we are now. So my first objective would be about 4.2 and then a little bit below 4.1. Next, soybeans, soybean oil, meal, and then corn and wheat. I am trying to justify an intermediate to long-term bull market having started a little while ago. And I mean 6 months to a year or maybe more than a year bull market. Big. We've got a possible double bottom in the soybeans. Yesterday, we came up and challenged the high, which would have been an upside breakout of the double bottom formation. And if it closes above yesterday's high, then I all of a sudden have an upside objective of 1185, and it will be trading somewhere in the 1080s, probably. That's the breakout of a broad double bottom formation, the first low, with a bullish engulfing ER buy signal. Very nice. August 26th last year. And the lowest low overbought on my custom RSI index, December 19th. That's the double bottom. And the breakout's always the high above the highest high between the two lows. We almost touched it, missed it by about 2 cents yesterday, and basically just backed up a little bit, but we're holding pretty well. I think it can happen very soon. Soybean oil has already started to come up very nicely off of what I believe to be a large head and shoulder bottom. But we have a ways to go before it breaks out to the upside, and then we have a much bigger upside objective. The first low is in August of 24. The head of the formation is August 16th of 24. And this last significant low for about 2 or 3 weeks was, let's call it December of last year, into the first week of January. Now, we just made a couple of days ago, Monday, a new high since December, January. Excuse me. And it didn't hold because we got overbought and hit resistance. Okay, we backed up during the week, but there's no downside breakout. It just came back to some support. And I'm thinking it's going to continue to hold right around here, maybe a little lower. And all of a sudden, next week, maybe sooner, breaking a new highs into this resistance area. Then you've got the neckline to be concerned about, which is a little under 51. And if that is broken, up we go to 61.5 or higher, longer term. Next, meal. Triple bottom possibilities. I keep talking about these long-term possible bottoms. I got one that's already happened, and you're about to see it. So meal has this major support area that's held very, very well, but we just can't seem to get it to go above new highs for the last several weeks. Once it gets above 321, let's call it 22, on a closing basis, I think there's going to kind of explode, break the major long-term bear trend line in the process, overcome the resistance areas that are not too far above the market, and really start to look interesting if it gets anywhere near 360. Let's see what happens. Corn has already done a lot of this. Shoulder, July 24, head, August 26, and shoulder with a buy signal on the low of the damn shoulder, October 17th in corn. Bullish breakout, basically December 26th last Christmas. Stalled out a little bit. That's basically the test of the neckline. No problems. Took about 2 weeks, a little longer than most of them. Bounced into new high ground big time, all the way up to the minimum upside objective on January 23. Then we got a little down. We got a little bit of a new high. We got a little bit of a new low. We got a little bit of a new high. Sounds like a broadening top, which are very, very, very rare. And we're still hanging in there pretty good. I like this. I keep saying minimum upside objectives, and we have gone just a little bit further. But I'm looking for another move up to probably 513 and even higher. Next, Crete. Well, there's a double bottom here from August of last year, late August of last year, with a bullish engulfing on the bottom of the move. Come on, people. And a triple low, which is really a major low, therefore a broad double bottom, only last December, early January. It hasn't gone up that much that quick, but today we have an outside up day, bullish engulfing. Of course, we're nowhere near oversold. We're almost overbought. But that implies the market's going to go up some more and probably get overbought. And then we're going to have a correction, probably starting around 600. That looks very possible. And it could even pop up as high as 631. But I'm liking this. Broad double bottom, major upside breakout would take place over 635. Then you'd get an objective of about 735, 6, 737. Huge move. Next, new lows, cattle, bearish engulfing on Monday, came back a little Tuesday, but closed lower. Yesterday, Wednesday, came back up, touched my ER, new short sell signal, got short. I think the day trade was actually a small loss and held overnight. Kaboom! Great profitable trade. The next day, we sold it short at about 201.30-ish. And here we are, 196 and a half. Hey, working great on the ER3 overnight position. And if we're still short, and I'm not showing those trades, from the ER1 overnight, which is quite possible, I'm not sure. The rally yesterday just might have knocked it out. I'm not sure. It would not have been a large loss. Today's single move down covers all of any tiny losses we might have had. So I'm liking what I'm seeing. And I'm now looking for that move down. I think I've been saying 192, and we're well on the way. Hogs, I don't know. I'm kind of stumped here a little bit. A lot of resistance around where we're at. Have we really started a longer term bear move? Could we start closing below 85 and a half? Yes. Probably even below 86 and a third. It would be a yes, but we haven't done that. Can we climb some more? Not overbought? I suppose so. I'm going to wait. XYZ. This is a double shoulder, head and shoulder bottom that's fairly small. Usually they're bigger. The symmetry is pretty darn good. There's your first shoulder low, December 20. Then the inside shoulder, December 31st. The head of the formation right smack at support, January 13. The first inside shoulder on January 27th, and it looks like maybe yesterday, the last shoulder, February 5th. We're rallying a little bit today. Momentarily, we're down slightly, but today's high is higher than yesterday's high, and today's low is higher than yesterday's low. Just the current tick is a little lower. If we do continue to start to work higher in the next few days, the neckline is going to be at approximately 94.40-ish, 30-ish. And if that is broken, And I'll do the measurement right for you here right now. It's going to be from here up to here. That's the depth of the formation. And you take that measuring stick, if you wish, the depth, and you put it at what you think is going to be the breakout. Let's go a couple of days to the right. That's good enough. 108.17. And why is that important? Because it's making a new high for over 2 years again. Obviously perpetuating, well before it gets to its minimum upside objective, a longer-term bull market potential. This stock has been as high as 290 almost. No major, okay, that's significant, resistance until 150. And then major again at 193. All right, let's see what the E-mini's doing. Looks like not very much. Nope, it stopped right about the time I was talking about it stopping. What was that time? 10 o'clock? God bless America. 10:04:05. All right, so maybe we've started something on the downside. You guys have a great day. Profitable trading to you.